Hello, everybody, and welcome to the payment catch-up panel. We have quite a lot to cover, so I'll start right away with a quick overview of just some of the payment news, and then we can start with a few related questions. There's been many evolutions in the payments industry, and potentially some with potentially quite a few consequences to the brokerage industry. So first, for example, we have a lot of large group consolidations. For example, Pfizer, who bought First Data, and of course Worldpay, bought by Vantiv, and then Vantiv by FIS. Then of course we have Nuvel, who acquired SafeCharge, which is actually funny because when I prepared for the panel, I didn't know, but there's been a new announcement, so we can also congratulate Nuvel on the new member of the family, Smart to Pay, the latest news. So we'll speak to that, and of course, for another example is the acquiring bank Corda, who has been bought by Rapid, a new fintech company. So also we have the WireCard debacle that we're going to discuss that raised a lot of concern. I'm quite sure that a lot of our brokers in the audience have suffered from the catastrophe. But we have a lot of positive things as well, like the emergence of new ways for our traders to deposit. Of course, the cryptocurrency, but also all the local and alternative payment method, about 250 of them for the main ones. And the development of Google and Apple Pay for mobile payments. Then we have all of the regulations that we need to discuss, GDPR, PSD2, the strong customer authentication with 3DS 2.0 and the implications, and then the Visa, all the schemes, rules in general, and Visa chargeback rate that has been reduced to 90 basis points, and the rumors that it's actually going to be reduced even more. So that's a and then we also have the technology evolution in the industry, independent gateways and all the concept of payment orchestration that we're going to have to discuss with all the APM integration and network tokenization through the scheme. That's actually something that we need to discuss. So, as I told you, it's quite a lot of topics to discuss, and we are short on time. We only have about an hour, so let's get started. Here we need to discuss all this. We have, ladies first, Ella Rosenberg. Ella represents the Israeli EU Chamber of Commerce and Industry, and she's probably the best person to consult when it comes to the EU regulations. Ewoud Barink. Ewoud is the Business Development Director at Worldpay. Ewoud has a tremendous expertise with CFDs and Forex and crypto, and he has a deep understanding of the broker's payment needs. Lochan Sim, VP Partnership and Strategic Sales at Optile. Optile is an open payment orchestration platform that simplifies online payment and global commerce. Raphael Tetro, Senior VP Merchant Services at Nuvel. Raphael is not just a friend, he's also probably the most efficient person I know. He shows an outstanding level of professionalism, and he assists brokers achieve profitability levels they did not even dream were possible. I can tell you from experience. And then myself, Dan Lagemi, I run BPY Services, a consulting agency. We help brokers and merchants from various industries with all the aspects of their payment needs, fighting needs, chargebacks, approval ratio, strategy, etc. So maybe we should kick off with WireCard. Actually, what are the lessons to learn from the WireCard fiasco? can working with a third-party gateway help with the redundancy of acquirers? Uh, Lochan first, maybe, and then we'll see. Someone else?
Yeah, sure, Dan. So I think, in short, yes. It's hard to give a solid answer for everyone, but there's definitely a lot of cases for yes. I think we've seen with some of our customers that by working with a third-party gateway or an orchestration layer, one of the reasons they're built is because it helps that lift and shift from one provider to another become a lot more BAU, and it allows you to run multiple providers at the same time in the first case. So we had some customers that were sat with WireCard. It was an internal decision to come off of WireCard before the day, before one of the main days actually happened. For them, it's logging into the platform, it's moving your traffic over within a minute, and yes, that's just one part of it, but it kind of shows you just how straightforward things have been. Other merchants, I'm sure everyone on this panel has encountered, have had to do reintegration. Some have done full RFPs. Some have gone through the stress, of being an individual payment manager who is responsible for the suppliers that they've chosen and has had to bear a fair amount of pressure from their seniors and from their business while going through all of this. And I think the biggest lesson that we're seeing in the discussions that we're having with customers is it's all about agility. So whether it is WireCard or whether it's redundancy with acquirers of going downtime, or whether it's just trying to find the best provider for your own needs, that's where a lot of the discussions are going now. It's around agility. How do you use software out there that allows you to get that perfect payment set up for you as a merchant or as a broker at that specific time? Because in November 2020, your needs might not be the same as November 2023. And your needs are going to change, your business is going to change, the market's going to change, the regulations are going to change. And therefore, having one of those open orchestration platforms allows you to adapt without having to necessarily worry so much about events and specific trends that might impact you on a day that you can't predict. No one could predict the WireCard fiasco was going to unfold at the day that it did, as big as it did, etc. And making sure that your business is set up for those kind of events, or whether it's downtime or any of your customer needs, is critical. And I think that's the biggest learning that we've got out of this.
And just to add from my side, I think it's an unfortunate situation that you have to find out that you need to have a redundancy strategy based on what happened with WireCard. And there's also the angle of the fact that for, let's say, the payments industry, if we look at reputation, this is also something damaging the reputation of fintech and payment service providers. And that's why, at the same time, I also think it's so important for a merchant to have a redundancy strategy within, let's say, the payments infrastructure that they build.
Yeah. Totally.
I'll add just one tiny comment to that, to what my colleagues just mentioned. So yeah, first of all, definitely something which is very much unfortunate. Just to think of the number of employees that WireCard had, the number of affected merchants that WireCard had, which needed to find a new home quite rapidly. So indeed, there's a lot of precautions when it comes to other affected stakeholders, especially when it came from such a big player in the market. I think WireCard used to have a market cap at its peak at around 28 billion. Used to be in the top 30 German public companies in DAX. It's definitely unfortunate, but again, I think at the same time, it basically shed some spotlight on the importance of redundancy. So, for example, if you're working with just one provider, it's okay. It's okay to work with somebody that you feel comfortable to work with and is reliable. But at the very same time, we all saw that anything could happen, even to such reputable companies, buff and regulated, such as WireCard.
And totally, but I think that stresses the point of Lochan, is the idea that you cannot, no matter how reputed the provider is, you cannot rely, and you probably need to have some sort of a gateway that actually lets you orchestrate your payments the way you want them to be orchestrated, and not rely on the gateway of your provider, because then you're kind of at the mercy of something happen. It's not going to be that easy to for example, switch from one provider to the other. The tokenization, and we'll get to that with the network tokenization, but the tokenization, if it lies on the acquirer or on the processor side, then when that falls, all that database is lost, kind of, or it's difficult to get it, and it's going to take some time. If it's on the gateway side, then you do have the time to switch over to the next in line and minimize the exposure, I'd say. All right, then. So next topic. So yeah, we mentioned the large group consolidation. Ewoud and Raphael can speak to it, but what I wonder is like what the trend means for the merchants. It's really, we saw it, the example I've given. There really is some sort of consolidation. The small players are either bout or they fade out, I'd say. So any benefit or downside for the our brokers? Raphael, maybe first, and then Ewoud.
Yeah. So there is, as everything in life, there are a few ways to look at it. So there is, if we're trying to find a downside, there is a downside. I think that there's a downside by the fact of having maybe less competition, right? You have less providers to go to once this consolidation process takes place. But nevertheless, I think we're not at this stage where we have only a few main players. I think we see that in the payments field, more and more new companies emerging. So we're not at this level, but if we're trying to find the downside, I think this would be it. However, it comes with a lot of new advantages. So if, for example, if we take, for example, the SafeCharge acquisition, right, which took place in August last year, and what did we benefit from being acquired by Nuvel in Canada? So eventually, when we're taking a look at what we can offer in August 2019 and in November 2021, we're talking about a completely different set of products and services that our merchants can benefit from. So if, for example, in the past, we couldn't offer certain services in terms of point of sale, for example, to some of our merchants, now with the new acquisition, we have a broader set of tools. Dan, you rightfully mentioned that it was announced a few weeks ago that we have the Smart2Pay acquisition. So the Smart2Pay acquisition came to broaden our alternative payment method proposition, and also to offer services, even though it's not too relevant to the FX or financial services industry. But the Smart2Pay guys offer today a marketplace solution. So companies that offer a marketplace where buyers and sellers can meet and engage, rather than us going through the process of developing the solution ourselves. With this acquisition, we can facilitate such a service. So there's a lot of advantages in having such consolidation to take place.
Okay. Ewoud?
Yeah, I agree on, let's say, the downside of what we just touched base on the redundancy topic. I think it's a downside if you would have consolidation of, let's say, the same services, that one provider is consolidating with the other within the same field of services. If we look at what happened, for example, with Ventive and Worldpay, so Ventive acquired Worldpay. But in this instance, you were combining a very strong US acquiring platform with the European and rest of the world acquiring platform, which was accessible via one API. A very nice example of how this would benefit, for example, crypto merchants and crypto brokers, is that we are able to offer US domestic processing over the Ventive acquiring platform, which runs via the same API that you use also, let's say, to tap into the, let's say, Heritage Worldpay acquiring platform. And then in 2019, so within 2 years, we had 2 acquisitions. So in 2019, we had the acquisition of FIS. So FIS acquired the entire Worldpay group. But the DNA of FIS is not really, let's say, payments. Let's say the core DNA of FIS lies in the banking and capital markets. So the situation in this case is that you're attaching 2 different worlds to each other and see whether we can offer services to FIS customers which are related to payments and the other way around. And one very nice example in this case is that, so there's a lot around, let's say, reconciliation services, treasury management, business process outsourcing. There's a lot that FIS is already doing, which we can now also offer to our Worldpay merchants. But at the same time, if we look at specifically what is interesting for brokers, for crypto brokers and crypto exchanges as well, is the fact that we are now able to offer a service to issue white labeled debit cards. This was, let's say, back in the days impossible for us because it was more focused on the processing of a transaction. But now we're able to, let's say, offer a wider spectrum of services and products. So if you look at it from that angle, there's the possibility of a merchant to go to one provider in this case and get a lot more different products and services. I think that's a benefit for the market.
Yeah, the synergy.
Yeah, to add to that as well, I think like my first job in payments was like in 2007, where I think like it felt like being on the inside, there wasn't as many providers as there are now, even with the consolidation that's going on. And like we, for instance, like we work with over 100 payment companies in terms of integration. So we do get a fairly inside view of like what's going on from a merchant's perspective across the industry, and like agree with everything that's been said, right? And I think the pieces that I would add to that are like, I definitely like empathize with like the people that have to make the selection of the payment providers. There's definitely been times where they've done RFPs and consolidation happens partway through an RFP, and that throws the whole RFP out. But on the positive side, I think like to Ewoud's point is there's also so much now where payments used to just be like, hey, let me just process this Visa transaction as quick and as cheap as possible. Now we've got all of these value-added services coming on, and you're making the decision not just about, hey, how cheap can you do this processing, but what value can you add to the business? And I think like that's what's really interesting. I think it does make it a little harder for the merchants and the brokers to be able to understand that which are the providers that are able to offer this extra value. But I think the ones that do have the chance to do that, and for the providers that are able to clearly educate and clearly communicate what their extra value proposition is, it's a really, really good time to be in payments.
Right. Agreed. All right. Next topic then. Let's go to the regulation news. So yeah, where do we stand on the PSD2? All of the deadlines, it was postponed and then postponed again, and we heard recently even Belgium postponed again. Any further extension to expect from 3D 2.0 and the requirements, and what are the deadlines looking like? Are the issuer starting to implement it? Ella, maybe, and then.
Well, funny enough, every single time I get asked about deadlines in the regulatory framework, it seems like a State of the Union of the European Union. It's ridiculous because I see the same thing I saw it with 5 MLD and 6 MLD, what's coming up in December 20th. It really feels as if not only the European Union as a market is changing, as an internal market, but I also see it as it changes the industry. as a touch go basis. Now, specifically on PSD2, funny enough, I think the exact date, the previous one was September 14th, 2019. I think that was the previous date, that was last year. The current date is December 31st, 2020. Now, here's where it gets really exciting. 6MLD should be implemented by December 20th, 2020. Now, I know there's a lot of focus on PSD2 specifically for the industry and for right reasons. Funny enough, if you take 6MLD on the one hand and if you take PSD2 on the other hand, it creates a very unique situation in which not only the member states have to implement 6MLD, but the internal procedures of the private enterprises also have to go through PSD2. Now, as I see it, how do I think there will be any sort of postponement? Let me put it this way. It depends. I know this is an answer that people hate, but when it comes to European Union law, it's the best answer I can give you. Specifically on PSD2, I can say that when it comes to the European Banking Authority and ESMA and the European Central Bank, and all of those lovely regulators that we speak to, or no, I speak to on a daily basis, they themselves have no clear indication why, because of COVID. Now, I know COVID has been used multiple times, in multiple occasions, under multiple legislation initiatives, both on the member state level, on the European level, to create a situation of excuses, and I see it in various jurisdictions. The funny thing is that here it can actually be used. So unlike situations in Estonia, for instance, where I don't believe that could be, some sort of a justifiable excuse, here it can be. And not only because the market is not fully transparent yet and the market is not fully ready yet, you also need to bear in mind how these legislative procedures come into being. So essentially, when you create some sort of legislation on a directive level, the majority of the work are done on COREPER sessions in Brussels. So when it comes to the COREPER and PSD2, it can create a situation in which you have a meeting of the European Council specifically on PSD2 in one room, and then the room next to it you have 6MLD, and the room next to it you have a different directive, and the room next to it you have a different directive. So because on the European level, the rooms themselves don't speak between one another, and I'm an avid fan of the European Union, but when it comes to these sessions, it's very difficult to maintain some sort of correspondence. It really depends what happens on the COREPER sessions and the implementation that they receive from the EBA. I would like to give you a clear-cut solution and an exact date where I can say, yes, this is it. I can't give you that, sadly enough.
Understood. Makes sense.
I'm sorry if you're disappointed, but that is the case.
No, but that's a tough one. I knew it. So yeah, it is definitely tough. But in the same line of thoughts, that's actually a question we receive a lot. How will the transition, and maybe not for you, but how should the transition period be handled? Because there's a concern for the brokers and the merchants out there. If I implement it and the issuer is not ready, am I going to lose some sales? And the same question if the issuer is ready and I'm not. So I know that Worldpay has a feature called 3S Flex, which allows to kind of switch in between. I'm assuming Nuvel has the same thing. The idea being to kind of allow the merchants to try the solution in 3D and benefit from any kind of frictionless possibility that it brings. But is it really possible not to lose any sales because of that? Like, can we retry in non-3D, and until when? That's kind of a very important one. So maybe Raphael, and then the others.
Yeah. So in a way, we should divide the answer to that. So if the answer is what is going to happen in January 1st, 2021, and what should brokers expect to happen to their approval ratio? Okay, so the answer is that on the short term, most definitely we're going to face a lot of challenging. This is a transition period, okay? There are many exemptions to 3D Secure 2, which are not that relevant to the cryptocurrency exchanges out there, to the financial services brokers out there. Perhaps Moto transaction via virtual terminal, but merchant-initiated transactions are not as relevant. For EU-regulated brokers, maybe one-leg transaction which are taking place outside of the EU are not that relevant. But this is the downside. So we're definitely going to see a hit on the approval ratio for the short term. We're going to see brokers which are not necessarily ready with the 3D Secure 2 implementation, and they're going to hit some decline on their success rates, etc., etc. But I have to say that on the positive note, I think that there are many different advantages in the 3D Secure 2. Advantages such as the user experience, which is by far more slick than what we're familiar with the 3D Secure 1. And I think that on the long run, we're going to have something which is by far more beneficial to financial services brokers out there. I think that once issuers are going to see that all of the transactions are going to 3D Secure, they're going to feel more comfortable with approving their transactions. They're not facing these situations where they have a liability shift imposed on them. So I think as an end result, eventually, if we'll compare the approval ratio that we have up until 2020, and starting from January 1st, 2021, maybe not on the short term, but on the long run, I do believe that we're going to see an uplift in the overall approval ratio as a result for all transactions going to 3D Secure 2.
Got it. Makes sense. Ewoud?
Fully agreed. We have the challenge right now whereby we notice that some of the issuing banks, the majority of the issuing banks are not even ready for 3DS 2. And that's where we come with services that we do a retry with 3DS 1. But the ultimate goal is to go for the highest level of customer authentication, which in the end of the day will help on these fraud levels. And fraud levels is a big challenge. It's increasing year over year on everything that we try and everything that we do. So this will be a very powerful tool to bring down these fraud levels. But yeah, time will have to learn how this will develop. But let's first make sure that these dates actually come into place or come into effect. And then we can see what the outcome is and then what type of effect it will have on, for example, the acceptance also. Because ultimately, if the issuing banks gets more comfort on particular transactions, then of course we will see the acceptance increasing. And I hope that we can move the business and the industry towards that new level.
There's a point that you may raise just for a quick second on this specific topic. When it comes to not even legislative initiatives, but market initiatives, specifically in this field. What's funny enough is that I've noticed that, let's say, legislative initiative says one thing and has a very clear direction, but when it goes down to the implementation level, whether it is with the banks, whether it is on the member state level, whether it is even on the basic financial institution level, the actual implementation is drastically different from the actual point in certain levels, yes. And this is a point where I see that the European legislator is not taking into account and is refusing to take into account in many, many different levels. I did see it on various occasions that the compliance team of certain EMIs are more familiar with these banking regulations, these specific payment instruments, much more than the regulators sitting in Brussels or the regulators sitting in Paris or whatever they are.
Yeah, and that's actually kind of related to the remark I wanted to make, because I'm kind of more, merchant oriented, and so I understand that everything that was said until now is kind of, in the long run, it will be a good thing. The question is, what are we going to do, when issuers start declining the transactions, because there are or there are not 2.0. What do we do then? Like, any of you have any kind of some sort of tip and tricks, a strategy that you feel would be, for example, as a consultant, I say most of the time I try to recommend my clients to make a sort of a beam map, that gets actually refreshed on the approval ratio, and you test it in 3D1, in 3D2, in non-3D, and you see, and sometimes it doesn't work, and you keep that kind of, and actually you can find some of that information online as well. So I think that's one of the ways, that you can stay on track, because overnight an issuer can start, refusing non-3D transactions, and then that bin is dead to you, and by the time you kind of, realize that you've lost quite a tremendous amount of business. So that's the kind of strategies that if any one of you has anything to help, I think that will be quite interesting.
I'll just give one remark in order to give a tip or how to assist merchants which are very concerned about the future to come. So it's not something to be so alert. It's not bug 2000 or anything which is yet to be concerned. Nevertheless, it's better to be safe than sorry. So what we usually advise, and I'm sure that my colleagues on the panel would agree, that first of all, every broker, every merchant which deals with online payments should be completely ready for the 3D Secure 2 PSD2 implementation. From a technical standpoint, this is the starting point. And in addition to that, they need to work with a provider that obviously will allow them to do resubmission for frictionless payments and to resubmit the deposits in accordance to the relevant 3D Secure version. So if you have a provider which allows you to do so, then it will allow you to still process these transactions regardless to the 3D Secure version, or whether the issuer has been ready with 3D Secure 2, etc., etc. So it's very, very key and very important to make sure that you don't delay things to the last minute. You, from your side as the merchant, as the broker, you're fully prepared for 3D Secure 2. Your acquirer or PSP provider is fully ready. And once both parties are ready, I don't think there should have any type of technical issues when it comes to the implementation of 3D Secure 2.
Yeah, like I'd add to that as well. I agree with it, and then what we've been doing over the last few months is just working with our customers to spot like their readiness. I guess to Raphael's point, like technically that you have to be ready for it, and with different customers at different maturity and readiness levels, it's varying. Right, some of our merchants are still with PSPs that don't offer a 3DS2 solution, and we've been working with them to like get them over to a provider and educate them on how to get to a provider that can get to that level. We've got others where we're a lot further, and we're perhaps discussing around how do we best handle soft declines. But I think the best piece that we've got at the moment is like sitting down with the customers to create a community that's going to be willing to share data. Like you talk about the bin behavior, you talk around like the handling the exceptions for the more advanced customers, like this sharing of the data in the community. Like it was a couple of weeks ago, I think one of the payment managers of Microsoft posted on LinkedIn their stats per 3DS2 routes. I think that is super valuable, as the feedback we get from most merchants is like we just don't know what to do or who to believe. And I think this feeling of a community sharing the raw data and then being with a provider that, like the two that are on the call here, like that they know what they're doing, they have the tools to help you get through it, is like super important, albeit I accept slightly generic advice.
Yeah, so don't wait and but reach out actively to your provider and open the dialogue around this topic.
Yeah. All this makes a lot of sense. Okay, another point, and that's I'd say a broader one. I gave the example of the network tokenization, which is kind of the token, but that would be carried by the schemes along the way and kept by them, which is supposed to have wonderful implications on the chargeback ratios, on the approval ratios, and the PCI DSS liability, obviously. So that's one thing, and would that be interesting for brokers? And along with that situation, that question and that topic, which new technology do you guys provide and feel that would be important to the brokers and the merchants? And something maybe even more specific that you believe that the brokers should have on the lookout, because this is something that could be a party changer or something like that. Technology-wise, that's the technology side now. Maybe we start with Raphael and Ewoud, or even Lochan on that.
Yeah, so if we touch the topic of network tokenization and what it means, if we break it down a bit, so we're gotten accustomed to knowing a little bit about PCI levels. So in the past few years, we know that merchants were reluctant to be PCI compliant. There's a lot of headache around the topic, many different audits, many different costs associated with being PCI compliant merchant. So by default, there's a lot of promotion towards shifting this entire PCI liability to your technical gateway, to your PSP, to your acquirer. So the Visa tokenization works a little bit the same. So basically what happens is that the card schemes, Visa and MasterCard, says, hey, acquirers, you guys work with these merchants, you receive the card data. Once you receive the card data, send this to us. We will, in exchange, provide you with a token. So this token, this tokenism system, basically helps acquirers, merchants, cardholders, every stakeholder in this equation, in the sense of first of all securing their data, because as the merchants are exposed, if they are PCI compliant, to hacking of their databases, et cetera, here also acquirer says, listen, I can also store just the token ourselves, and by this be less exposed to any type of data breaches. But in addition to that, there is also the great advantage of the Visa tokenization or the MasterCard automatic billing updater, where we can see a great uplift in the approval ratio. Because if we used to see, when we apply to our merchants these features, so if we used to see declines which were caused due to card reported as lost or stolen, or cards which were expired, all of a sudden, what we're seeing here is that we are able then to process those transactions automatically. Why? Because the card scheme have the new card details, we just shared the token, and as a result, we're able to process the transaction successfully. This has tremendous impact. Just imagine of the frictionless or the user experience. Instead of a user trying to make a deposit, receiving a decline, saying, oh, my card just expired, going to their wallet, taking their card again, making the same deposit. during the process, the user can change their mind, not continue with the deposit, go to a different broker, etc., etc. So this has a tremendous importance to all stakeholders, both the acquirers, we benefit from the transaction being processed, of course the brokers, merchants benefiting from it, but also the cardholder, which is able to keep the smoothless deposit experience.
Got it. Ewoud, maybe?
Yeah, that I fully agree. I mean, tokenizing the card details is a very, very important thing to have it organized and implemented, because still, whenever we start the conversation with the merchant, we always sign up and go through the full payment process. But I can tell you, like in 6 out of 10 times, there's no tokenization being used whatsoever. A user needs to enter their card details and all those digits. A mistake has been made very quickly. And then on top of it, what Raphael was just saying, it also has an influence on acceptance rates and fraud. And we have a lot of examples whereby we can show the data and the difference when using a token, how this would benefit you as a merchant. So I think step one in this case is understanding the benefits of tokenizing these card details, improving the UX for your users, and ultimately you as a merchant benefiting from the outcome that you have higher acceptance and lower fraud. So I think there's first a step one to take before we go even to a higher level when we talk about network tokenization.
Got it. So we're running a little bit short on time, as expected. So let's. I want to take some time for the regulation, and especially in all of the jurisdictions, because I know that that's something that it's really important for the brokers and to know how to expand and the exposure related. So maybe Ella, can you give us a little bit of rundown on what's going on?
Exactly. Exactly. So essentially, there's a very interesting concept in European Union law, which is called spillover. And this specific spillover, up until my experience, has been only relevant to the European Union. Funny enough, in this industry, this spillover is not only relevant for the European Union, it's relevant for other jurisdictions as well. And this is affecting not only Asia, but it's also affecting the Middle East and states and South America as well. So essentially this, I call it regulatory blockage that the European Union is going through. I think we saw it very evidently with PSD2, with 5MLD, with the implementation of other directives, even with GDPR, for instance, which is a regulation. Within the European Union, it creates a situation in which not only the European Union countries are affected, but they're also affecting other jurisdictions as well. I'll give you an example of the Emirates, which has been in the news quite recently due to the new agreements that have been signed. And funny enough, I see it a lot in the fintech industry there. The fintech industry in the Emirates, and when I speak about the Emirates, I speak about Abu Dhabi, Dubai, but I'm also mentioning Bahrain as a gateway to Saudi Arabia within the same breath. Their fintech sphere, as much as it is developed, their legislation is not. And when it comes to even PSPs or financial institutions that are regarded as EMIs within this jurisdiction, they still need to apply certain European Union law directives in order to operate. And I'm not only speaking about the European market, I'm speaking about the Asian market as well. So when I speak about the spillover, I'm not just discussing the fact that it's spilling over from the European Union to the member states, it's spilling over to the rest of the world, which is absolutely remarkable. This is something that I haven't witnessed up until now, and even I'll give you the most basic example, which is 5MLD. 5MLD started in 2018. It was ratified then. 6MLD will be in practice quite soon. 5MLD changed not only the European member states, it changed the legislation of Bahrain, funny enough, which is now introducing cryptocurrency licenses. It is also changing the sphere in Abu Dhabi and in Dubai, which in turn is also implementing Saudi Arabia, which in turn is also implementing the Asian market, which leads to South America. So it's one full circle. Same thing for PSD2. Now, I believe once we have PSD3, hopefully, it will be the same thing, and I'll explain to you why. Because the European Union market is one of the large, I think it's the second or third largest market on the planet, don't catch me on that point, it creates a situation in which not only institutions that are not in the European Union have to comply with their legislation, they have to do it de facto. So just because GDPR is a remarkable example of that, just because you have GDPR in the European Union, all of a sudden it affects Israel, all of a sudden it affects Dubai, all of a sudden it affects Bermuda. So the same thing here. As I said, it always depends on the core repair sessions that don't share any information. So as you know, as I mentioned before, it's a spillover effect, and I see the trends coming from the European Union. I see the European Union being on the forefront of these legislations and other countries following. But at the same time, the European Union has no clear indication of where it's going, because there's no anti-money laundering body dealing just with anti-money laundering. They said they will do it in February. That sadly didn't happen. 5MLD was a wreck. So we'll see how 6MLD works. Same thing for PSD2. I'm sorry, then we'll see how it happens with PSD3. On the payment sector as well, I'll just give you an example that happened to me, I think 2 or 3 days ago. A PSP, for instance, that was licensed in Dubai is trying to acquire certain services in the European Union, or trying to create a certain amount of harmonization with its internal procedures in order to attract the European market, and they simply can't do it. Not because the forefront of the European Union is not leading, but because Dubai is following the European Union. This is why.
Yeah, makes sense. Okay. Yeah, that's very interesting. Okay. Any follow-up, guys? On
I can say that, but I even see it's absolutely remarkable. I even see it in African countries, as an example. The mere fact that you don't have a proper harmonized rule that is harmonized on the market level, not just because someone sat in Brussels and did a core repair and passed it. It needs to come through the market. It needs to be a bottom-up initiative. And I mentioned this before, compliance teams and EMIs have more knowledge about European legislation than certain European institutions, and I stand by that point.
It's totally true, totally true. All right, so less on the regulation per se, but more on the schemes regulations. Just wanted to touch base on the chargeback ratios. Visa switched over to 90 basis points for the chargeback ratio threshold. That's difficult. I mean, merchants are still struggling to keep below the 90 basis points. And so the question is kind of twofold. Do you believe that MasterCard will follow suit anytime soon? Because technically speaking, they're at 1.5% right now. And also there's been some rumors of Visa lowering it to 85 basis point or even 80. Is there any truth to that? And should we be scared?
Is that a question to me, or I'm not really sure?
It's probably more on the processing side. So let's ask the acquirers out there. I'd say, yeah. Raphael and
For silence, I wasn't really sure for a second.
Yeah.
So I can start by giving some input in that regard. So as you rightfully mentioned, Visa recently lowered their chargeback ratio threshold to 90 basis points. Whether we should expect MasterCard to do the same, I think they haven't changed their threshold for such long period of time. But from experience, usually when Visa does one thing, MasterCard is soon to follow, and the other way around. So I think it wouldn't catch us by surprise if this should happen. But in regards to whether Visa will further reduce from even 90 basis points, also, it's hard to predict, but again, I'm not sure that I'll be that surprised, and I'll tell you the reason why I won't be that surprised. I think today the main catalyst for such a thing to happen is due to PSD2 and the 3D Secure 2 requirements. So if in Europe every transaction will soon need to go to 3D Secure, then it should reduce quite substantially merchants' fraud level, chargeback ratios, etc., etc. So even if the process is not as convenient, but still this is something that is going to be mandatory. So I think this could give one incentive to even further reduce the chargeback thresholds, but this is something that we'll need to see during the course of the first few months. But again, I don't think that I'll be completely shocked if such a thing should happen in the light of PSD2.
Okay. Ewoud?
Yeah, fully agree. It's hard for me to predict what MasterCard or Visa will be doing. The only thing what I do know is that it is indeed a trend to minimize fraud and to get to lower levels. It's a topic on which you can spend easily an hour to talk on everything that is related to chargeback and what the influence is of having very high fraud levels. I think bottom line, what is important to do is also on this front, open up the conversation with your provider, see what you can do to first of all prevent fraud. So there's a lot of solutions that you can do. Think of machine learning fraud tools, chargeback fighting systems. So that's the second element. So you can prevent it and you can dispute it at a later stage. There's still a lot of merchants that don't do anything with their chargebacks, right? They just leave it as it is. Okay, well, in the end of the day, if a chargeback has been raised, it will count into your chargeback numbers, but still, it's important to understand that there's a lot of ways to fight it and to prevent it. And that's why you need a strong provider that can help you also on this topic. And in that case, if a provider can help you going below 50 basis points and whatever Visa or MasterCard will decide to do in the future, you will be proof and ready anyway. And another element, the lower your fraud levels are, the better influence this has on your acceptance. So in the end of the day, it has a huge impact on your turnover as well. But as it's so complicated and there's so many elements that you can take into account, it's important to also open up the conversation on this piece. And I'm conscious of the fact that we don't have a lot of time left, but after this session, we are also available in the chat. So please feel free to reach out to us on these specific topics and go a little bit more in depth on it.
There's also a crucial point that I think it touches upon everything you said when it comes to the internal policies of a company. What you mentioned, Ewoud, is specifically typical for a risk management policy. And this is something that is very crucial to every single company. Now, you can write and draft a risk management policy, which is perfect. It's 600 pages. It looks very glossy, as a manual. But this risk management policy has also need to be implemented within the financial institution. So it's very nice to have it, on file. It's great. It looks fantastic. But as part of, beginning to see the future in these specific topics, it's really crucial and it's inherent to make sure that this policy that some financial institutions put on file will actually be implemented on these topics specifically.
Exactly. Okay, well, guys, thank you very much. I, as you can imagine, had way more topics to discuss, but we can definitely continue with the audience in the chat. So thank you very much for your time and for a great panel, and hope to see you soon in the next one.